System will notify you once you begin your broadcast. The broadcast is now starting. All attention.
Good day, good evening. My name is Kenny. I'm here with FP's webinar certification course series. I'm just doing a bit of a sound check just to make sure that you can hear me all loud and clear as well as see my screen. Today is the third part of FP's webinar certification course series. It's part of the risk management, money management series as well. So I'm just checking on the sound and we shall then begin shortly. Okay, I think we've done the sound check all okay. Everything is loud and clear as well as seeing my screen. So that's great. So this is the Mastering the Psychology of Risk Management series. You are at part 3 out of 4 parts. So just for those who've just joined us, just in case if it is the third part that you've just joined us or managed to join us at, this is part of a 4 series once a week, and you'll be eligible for sitting in the quiz questions and then a certificate after that. Okay, so here we go. We'll start, and I represent FP Markets through FX Geometry. This is part of the certification course, like I've mentioned, and it will be a very interesting section today in part 3 because it'll sort of sip into the trade plan as well, but we'll be going more into the technicalities of geometric patterns and everything else, marrying it with the fundamentals as well as technical in the fourth or the last part. So what are we going through in this section is quite simplistic, but we're going through some tools as well to understand a little bit more about managing tough times, managing risky times, market conditions, as if a golf player who would actually be managing what you call the risk of a new course, for example, being in a new place for the championship, and various others. So we've got articles as well relating the golfing mind and psychology with the trader psychology. So there are loads to learn from a pro golf player as well. So we have got relevant links to help you understand more about the performance psychology and ways as well as steps in order for us to achieve what we want in both golfing as well as trading. Okay, so there's a lot of commonality between the two. So just a bit of a revision with a price trade plan. In order for us to build up resilience, patience, and discipline, it's always wise for us to have a trade plan. And I have the price trade plan for you to give you an understanding of how do you actually do that step by step. So in part 4, I'll be taking you through sort of a live scenario on how do I as a trader as well as traders in the community, in the FX Geometry community, does the apply the geometric trading method into this price trade plan. So we usually start with step 1, where we have got the psychology of the market. How do we actually understand what sentiments is in the market, what sort of emotions, is it a risk off, risk on? I'll explain a little bit more about what they are. How do you actually understand the trends, sentiments? So this is usually the first step in having a bit of a bird's eye view and understanding the sentiments of the market. So that's almost the same with how the golfer would actually be in the right frame of mind, understanding his surrounding, understanding, having a plan, and in knowing the barriers or risk areas that he needs to take into account in his mind, and sort of a checklist. So there's more or less the similar type approach in knowing how to actually manage change, manage risk in a new environment or challenging environment. So a golf course would look into the golf course itself, weather factor, a couple of other things, and in terms of a trader, we'll be looking at the economic weather, economic data releases, market conditions in terms of risky and non-risky assets, and various others. So we will be going through these elements, and it should be actually smoothly sailing you through this trade plan that I call price. So the first step, as I've mentioned, is the psychology of the market, and then we'll proceed to risk and reward, understanding our risk zones as well onto the chart, as well as in the market, knowing how volatile the market is, driven by what sort of factors. For example, understanding your lot sizing as well comes under the topic of risk versus reward, understanding what sort of leverage versus your equity, understanding the lot sizes that you would need to open with respect to the risk appetite that you yourself have. So you would have excuse me for that, we would have various elements to consider, and we've got simple formulas to introduce you to in order to understand all these, and also have a bit of a calculation on these elements as well. Okay, and we also go through the insights. Insight does actually encourage you to have a bit of a guidance and mentoring from your mentor. In this case, it's myself. So we'll keep you right on track through the GTI group, Telegram groups, private messaging as well, email. So various ways that you can actually contact, even through Skype, to actually understand a little bit more about whether or not you're on track onto the price trade plan. And if you've got any questions as well, it's good to clear out doubts as well during the day or before you actually execute your trades, so that we could be lowering risk as well as increasing our probability throughout the day. Okay, before you actually execute the trades. So this is all. It does also include various research material that I go through on a daily basis with my team here at fxgeometry.com, together with in collaboration with FP Markets, serving our partners as well as traders in general. And this would then be giving us insights into current happenings, whether it's economically, geopolitics, for example. So there are various risk as well as opportunities to sort of filter out from these events that are happening during the day. So these are insights that we at FX Geometry, together with FP Markets, will be sharing with the traders in general. Okay, and then we're looking into the fourth step, where we confirm, looking at the convergence, looking at all the elements and the information that we've gained throughout step 1 right up to step 3, whether they actually match out to give us a clearer picture of the overall market's trend, sentiments, understand whether or not we are in a risky environment, whether or not investors and traders are taking out their assets, their assets, and putting it into risky assets that are driven by greed, or are they actually taking out their investments from risky assets into less risky or safe haven. So that would then give us a bit of an idea on information that we can actually gather from the insight section in part 3 as well. So this is where we start to confirm in step 4 throughout a sort of checklist in understanding whether or not this would help us increase our probability and lower our risk before we go on to the 5th or the final step of executing that trade. So the execution side of it does also involve, being aware of all the information with respect to the trade that we are taking, whether we've got our stop losses in place. Take profit does actually mirror our risk reward ratio personally, and also to fill up the trade log would actually be included in the step 5 under execution and trading decisions. Okay, so these are basically the price trade plan and the steps forward. So what I'll do just now is to give you a bit of an idea into today, and some ideas on not only today but the whole month of July, and there are increasing number of events, geopolitical, trade wars, a couple of other things that are actually impacting the market to a large extent. So I would like to bridge theory to practice and get you to understand a little bit more about practical steps that we can actually use. So it does not only come down to just knowing about the news, but how do we actually apply all these little bits of information into our practical technical trading and whether or not it would help us analyze the market better. Together with by organizing all these little bits of information so that we become more informed or more of an informed trader. That's the goal of it. So strategically analyze the market as well. Okay, so here, for example, just to give you a bit of an idea, how do we actually start off the day? I'll be taking you through a more thorough sort of process um, throughout the steps that I take from P right up to E in the price trade plan, from the first step right up to the fifth step, various elements, more in detail and more realistic in the fourth part of this series of webinars, which is the last part as well next week, same time. And same day, same time next week, and we're looking into little bits of elements of what we need to first know. And here I would like to introduce you to a very simplistic tool that I've sort of bumped into a website called actionforex.com. There are various other tools as well that you can actually use, but here what I intend to have is just to have a generic first-hand idea of what's going on in the market through the help of a simple table here called the top 10 movers. This is just giving you this table here would give you an idea of the focus that most traders, investors out there may be giving attention to which currency, for example. So all we want to do is keep it really simple in this top 10 movers, whereby we want to have a bit of a bird's eye view and a glance really on the first column here from 1 to 10 and look at which currency would be appearing the most. And here, for example, we'll give a bit of an idea, maybe a balance between AUD and CHF, but let's say we take CHF in this case, whereby we've got a CHF which stands for the Swiss franc, seem to have appeared even in the first one at the very top, and then followed by third, fourth as well, and then you've got one more in sixth, and then on the eighth row or line as well. So let's just take for example that CHF has been a bit of a center of focus for most traders, investors. I mean, if you look into the change column right here, you've got a positive sign which stands for buying the base currency. So if you see a negative, that's actually, there's no negatives here, but if you see a negative there, that actually means that it's selling the base currency. So in this case, if they are buying the base currency, they'll be selling the CHF. And it's the same goes for CAD. If they're buying the CAD, they'll be selling the CHF. So it just goes to show that there may actually be more interest in selling the CHF as opposed to the other currencies, and that does actually depend on risk elements as well. What does that actually mean is that we've got a bucket or a basket of safe haven currencies, for example the JPY, we've also got CHF, AUD and ZD, various other pairs, but the popular ones are CHF and JPY. And also if you've got traders concentrating or focusing on least risky assets, then they'll be putting their money into gold, for example, commodities, especially gold. Then you will see a sell-off more on risky type currencies like the dollar and all the others. So here, for example, we're looking into a sell-off in CHF, retrieving CHF, so that transfer of wealth could actually be in risky assets like the dollar. So then, hence the reason we're looking into appreciation of the dollar. So what does that actually mean? Is that a risk on? Are they turning on the switch for the risk? We're just measuring the current conditions and weather of the market. We want to know whether or not it's a risk on, risk off. So from this table itself, if you've got more transfer of wealth from the safe haven type currency, for example the CHF, that actually means that they're transferring money or their interests are on risky assets, and this does actually then mean that they have got the greed factor building up, and they would be into a risk on. That means they're switching on their risk appetite, so they've got more appetite for riskier assets, and that does actually mean that gold would be least attractive at this stage. Dollar will be more attractive for investors, traders to buy. So hence the reason we're looking into more interest in the USD, so more interest in buying the USD. So if you've got USD versus the CHF, that's quite a clear point whereby you've got more buying sort of opportunity for yourself as a trader for the USD, and then selling the CHF. So a pair like USD CHF would actually be quite of interest by buyers as well, to buy the USD versus the CHF. So as simple as that. So I would like to take you through really practically in the fourth part, especially so that you get an idea of how we actually analyze the market through step-by-step process throughout the trade plan, throughout the price trade plan. So in this case, I just want to introduce you in this part, in part 3, just the tools that we will be using in analyzing the market for real in part 4. Okay. So here is quite simple. We've just gone through the top 10 movers and pick out a pair, and that is the CHF. So we know that CHF's been focused a lot. At this stage, it's probably best not to make any decisions of selling the CHF as well, because this is not the idea or the main, the primary aim to look into the top 10 movers. The primary aim of looking into top 10 movers is just to pick out a pair, to pick out a currency, not a pair, a currency under the column here, and the one that's mentioned the most, the one that appears the most. Sometimes you can even find one currency that appears from the first position right there, right down to the 10. So it's mentioned in all 10, and that was what happened in the morning, where the first few hours of trading this morning, when during the Asian session, we had the whole row here from 1 to 10 appeared with the JPY, so we knew that the interest at the time. So it does actually change from time to time as well, so we need to be really careful. Hence the reason we don't want to be relying or just based on one source of information. We need to organize that in sequential steps so that we can marry our fundamentals, sentiment, psychology of the market, together with the chart itself, and then looking at a candlestick chart, and then marrying it up, both technical and fundamentals, and then make a financial trading decision. Okay. Now we'll move on to the next. Once we've actually picked, for example, the CHF, then we can use the next tool here, also available from actionforex.com. We then focus and zero in on the CHF, which is the Swiss franc. And once we've actually zero in on that, we just want to look at how CHF is actually, fare. How does CHF fare compared to all the other currencies? How has it been moving? Has it got a favorite other currency that's moving most against? For example, here we've got big numbers like that 85, 92, for example, and then we can see that the NZD has been moving quite a bit, and we've got 1 point something right there. So AUD and CHF, AUD and NZD, for example, are the most preferred currencies against the CHF to be paired again. So we know that there's a lot of interest pairing up these two currencies right here. Again, this wouldn't should not mean that you just pick out these two pairs and then start buying AUD CHF and NZD CHF. That's just not the core aim here, and this is not the way we should be actually trading. So here, what we are actually doing now is to gauge the market sentiments, understand the weather, understand the turf. For a golfer, it would be understanding the turf, planning in his mind, looking at the turf, the dunes, and various moves in his mind already, knowing what are the challenges ahead. Now here, it's almost the same thing, knowing what currencies are actually of interest, pairing it up with CHF. It looks like they're mostly commodity currencies here. We've also got a big number 85 there against CAD right there, also Euro CHF right there. So we've got these three right here, three highest number there, gives us a bit of a pattern by understanding that the investors, traders out there are preferring CHF, pairing CHF up with commodity currencies, because CAD, AUD, and NZD are very well-known commodity currencies. Okay, so there you go. We've actually looked into this, and hence the reason we want to move step by step, and we just want to know basically what sort of tool we need, what do we need to look at first at the very first instance of analyzing the market, and then how do we actually follow through, and what are the step by step throughout the trade plan. So we're now going into the currency side of it. The next tool would be the volatility chart. Now we're still sticking on to that single currency CHF, the Swiss franc. We've gone on to the top 10 movers, we've moved on to the currency side of it, and then now we would like to get a bit of an idea of the volatility aspects of it. Now, for example, volatility could be both risk as well as opportunity. So we want to know now that since we've known that CHF may be of interest by traders for the day, we would like to also know what would be best pairs, which other currency would be best paired with the CHF or the Swiss franc. So in this case, you've just got a very simplest combination of daily and 4-hour volatility chart pointing right at the edge. The closer that shaded area to the currency would actually be showing the most volatility. So CHF is seen to be highest in volatility if paired with the NZD. So here we have got that commodity currency type feeling again, and we're looking into CHF versus the NZD to be highly volatile. Okay, so this could actually be a pair, CHF NZD, a pair worth venturing more, looking into the charts, just to get a bit of a first-hand approach in choosing a pair to actually analyze further. So that's basically it, as simple as that. Now, the other thing as well is we would like to use all these tools and match that up with the economic calendar as well, just to get a bit of a feel, a bit of an idea whether or not we've got investors and traders paying a lot of attention to which high impact, medium impact economic data releases. So here, for example, I just would like to look into the two columns where the flags of the countries are, as well as all these bars here that actually represents, if it is the red one, it would represent high impact news. If it's the middle orange ones right there are representing medium data releases, medium impact data releases. Okay, so here, for example, very easily done is to just look at the three red bars right there, and they represent both the euro and the USD, because we've got euro here, German flag under the European Union, so they've it would impact the euro since they're using the euro. And then you've got euro data right here, which is the ECB monetary policy meeting accounts. And you can always go on to FX Street or any other economic calendar, click on it and understand a little bit more if you want to read on it a little bit more. But for me, these numbers right here, sorry about that, let's move up a little bit. Okay, there we go. The numbers there are quite subjective throughout my experience as a trader as well, because it does not necessarily mean if it's positive it will drive the market upwards or heading towards bullishness, and vice versa. On the contrary, it could also go total opposite direction as well. So hence the reason I would prefer to look at where the party is for the day, and where would what are the high impact, medium impact news or data releases that could actually move or create volatility, as well as risk movements for which pair. So in this case here, as you know, we've got consumer price index with CPI represented in the US, for example, USD, US figures, so it would impact the USD. So we've got a likelihood as of today, for example, to look into movements that will actually impact both the euro and the dollar. Okay, there you go. So we've done the economic calendar side of it. Also, I've got several other tools to help you understand a little bit more about filtering news, because it's not all the news that we hear. Even if we sit hours and hours a day just listening to news, it's probably not an ideal thing to do, but it's also not a very practical thing to do. We need to understand, what tools, which news alert, for example, so we get an idea of what moves the market, and how high the impacts are, so we can then bring it forward and sort of put it all together and give us a better idea throughout the chart as well to understand. So this is what I'll be taking you through very simply in the last stage, in the last part 4, so we can actually look at all these tools, apply these tools, go onto the chart, start drawing the patterns as well, and giving you some trade ideas for the whole week. So that will actually happen in part 4, in understanding how do we actually create and develop more resilience through patience and discipline, just by having all the information of the market, whether it's fundamental and technical, set up together in an organized manner and in a sequential step that we call the price trade plan. So that's basically it. So as you can see here, we have actually got news alert that represents a couple of other currencies as well. But it's not just about looking at these currencies and going onto your platform and executing the trade. We would need to understand whether or not we are filtering the information properly. Are we filtering it to actually extract patterns as well, high probability, low risk patterns, and it's not just any patterns, because each pattern or each setup, for example, would be giving out, signals or trade ideas, but it is a matter of how high the probability would actually be, what are the risks ahead that we would be facing, and all other areas. So I'll be helping you in part 4 to actually go through all these processes and use the tools that are relevant, and then we are able to get some trade ideas out of that. Okay, so that's basically it. We want to keep it really short in part 3, so that you get an idea of what we'll be talking about. In part 4 will be entirely practical. I'll be drawing patterns beforehand. I'll be also preparing all the trades for the day. So it is going through all my trades for the day that I plan to execute or may have already executed, and going through with you on my day in not only trading but presetting all the plans and all the steps forward. Okay, with that, I would like to thank you and would like to welcome you. If you have not registered for part 4, please do, and we'll be going through that, and you've got lots more goodies in part 4 with trade ideas as well, as a result of us analyzing the market altogether. With that, I'd like to thank you once again. Have a lovely evening, and we'll see you in part 4 next week. Thank you very much. Bye-bye.